In the short term, might have a very similar setup as the Kiwi with the little 50 back short off the highs, but ideally, Aussie's actually got a beautiful series of longs. You can see that series trade once to target, same anchor new high, trade twice to target, and same anchor new high for a third time would actually be calling for this market to head down in a three-wave structure in a correction into the 75, 45 area where I want to be a buyer. Stops below the 74, 75, first target towards the 76, 25s or 70, yeah, and then all for upside towards the 79, 75 or 79, 70 area, ultimately for a new swing into highs. So let's see if the Aussie does pull back into its levels here, give us that next in the series hourly pullback. And of course, off the highs here, watch for these 50 back shorts. They're not levels I take personally would actually sell. But, when you see shorts get reactions, etc., it might mean something to the market, even though it may not mean something to your actual trade at the moment. So that 4-hour short coming here into the 77.40s, market's turning over. It gets free into the 75.25s. The next in the series long for the Aussie trades into the 75.45s. Everyone see how that is? And at that point in time, you're going to be probably in a no trend, no trade zone between these two levels until one side fails. The longs fail, we'll get a short off the highs. The longs hold and fail at the short, well, that's another story. But key inflection zones here on both time frames, and they're the reason we're moving around in this market. We've been looking at all of these levels the whole time, right? It's tough when it doesn't necessarily give you a trade setup, but it is what it is. So, already seeing this market get a reaction from the extension long, which is the third in the series of its trend. Means we are now long and free the Aussie US dollar. Because it's holding this inflection zone, and it was basically a three-wave structure to the downside into equal legs in the full 50 back, we're now looking for upside for the Aussie US dollar into the potential 79.70 area from this level. That is, of course, if we remain above the invalidation zone down into the 74. 75 area. So if we stay above 74, 75, so we're looking for this market to head higher. It can flag sideways, it can do all sorts of things, but so long as it's above 74, 75s, that's the invalidation zone at this point in time for new highs and for continuation higher. If it does break that level, the shorts that were up into this area that are from this 77.40 short would be getting free, and that larger 4-hour short might be taking over for the Aussie US dollar. But generally speaking, absolutely perfect into the news yesterday. Hopefully on that, it was a news spike. It's tough, but the level did trade. It's tough to get filled there. Brokers front run. We all know how news is, but it traded right into the news, It's tough. Yeah, Brad just says that's precision for you. Absolutely. You saw it in the Aussie US dollar, and you saw it in the pound US dollar too. This is precision. It really is. That's the thing about news events, and that's why news doesn't scare me and I don't pay attention to it, because all it does is it usually accelerates price into an inflection.